Goldman Sachs has issued a note on Tata Consumer, upgrading the stock to a buy rating. Mahima joins us to now walk us through the details from the report.
As you rightly mentioned, it's a completely opposite commentary coming in for Tata Consumer because Goldman Sachs has upgraded the counter to buy from a neutral rating and has hiked the target price to 1200 from 1040. What they're saying is that earnings inflection is ahead of its peers right now. In terms of returns, it's poised for a return to strong EPS growth over FY 25 to 27. Innovation and distribution-led scale-up of growth business is something that will augur growth for the entire counter. And salt, a medium-term market share gain and premiumization play is something that will overall benefit the top line going ahead. And growth business, that is innovation and distribution-led growth, will happen over FY 25 to 27. So this is the overall reason as to what makes Goldman Sachs bullish on something like a Tata Consumer and has, of course, upgraded the stock.
Okay, so while Tata Consumer might have a positive coverage there, FMCG sector has also been in focus because BofA downgraded two very big players in the space, Nestle and HUL, and also cut their target price. Both stocks are under pressure as we speak. And Mahima, tell us more details on this particular update as well.
As you rightly mentioned, BofA has downgraded Nestle to underperform from neutral and has also cut the target price to 2140 from 2315. What they're saying is that there are modest business trends and the stock is valued at a rich valuation. Soft demand trends as well as cost pressure and competition is putting pressure on the entire operating environment. Pricing can remain as a key driver for growth from now going forward. They expect volume recovery from here on, but that will be on the back of a lower base as well. Operating margins is capped and can move a tad lower as well going forward, and valuations are elevated in context of growth outlook as well as compared to its peers is what the brokerage is saying. They've also cut the earnings estimates by 3 to 5%, and overall strategy refresh under a new leadership is something that they're expecting overall to bring in some change. And lastly, they are also saying that for Nestle to pick up, they will have to overall check as to how their portfolio rejig happens, because medium to long-term growth depends on how the portfolio rejig entirely happens. So this is the overall view as to what BofA is indicating with respect to Nestle.
Thanks for that, Mahima. Now let's turn our attention to the defense sector. It is one of the top sectoral losers in trade today, but it has also gained over 24% in the last 1 month. So does this mean that this given point of time, is it a good buying opportunity? Well, my colleague Anushi joins in with more details. Over to you, Anushi.
So in terms of where the recent releases are concerned, we are looking at the defense exports number, which showed about a 12% growth to 23,622 crore. Now this includes about defense public sector undertakings, seeing about a 43% of a growth in FY25. However, if you look at the private sector exports, they were up around 0.15% only. Now, if you just go back last year, we saw about a 33% growth to 21,000 crore of a number last year. Government target remains for a 50,000 crore mark by FY29. So defense exports in focus. Overall defense sector also, we've seen a couple of notes, rally in the last 1 month or so, and why it's been in focus currently.